Hello everyone, and thanks for joining me today again at Crypto Trading. This is JB Trader, and today we're going to talk about volume and how the volume affects Bitcoin futures contracts. Alright, so what I have pulled up here is I just want to gain some perspective and some context on what does a lot of volume look like, what does light volume look like. So right here I have today's a snapshot of some, the most active futures contracts, and I have highlighted the volume. So as you can see, at the top of the list you have the ES. All right, it's the S&P 500 E-minis. This is the March contract, and so as of today, January 4th, the current volume is about 1.1 million. So it's 1129430. So that's the trading volume for today. And then right under that you have the 10-year note, the March contract, and their volume is right under that, little less than 1.1 million as well. So it's heavily traded, and because it's heavily traded, you have fairly tight spreads, and we'll go over that as well. And as you can see, down you have a big drop. The third one is the 5-year note, March contract, and that daily volume is 679,000, and then on down. Crude oil 631,000, down to the euro dollar March contract 409,000, all the way down. And the bottom of this particular list on the page, you have soybeans and copper, the March contract, around a little over 100,000 contracts traded for the day. Alright, so just keep those numbers in mind. Now I want to show you what Bitcoin futures looks like right now. So these are the currencies page. Again, as of today, Thursday, January 4th. At the very top, you see the euro. The euro March contract volume is about a little over 202,000 contracts traded. Right under that is the yen March contract at 114,000 contracts traded. And if you keep going all the way down, now we find some Bitcoin. So you've got the Bitcoin January futures contract from the CME at 756 contracts traded. And then you have the CBO February contract for Bitcoin at 276 contracts traded. So the volume is very light. It's very light in the world of currencies, and just overall futures market, it's very light volume, and it is new. Okay, so now what that looks like on the chart, here's my chart. I'm going to pull up TradeStation. TradeStation is one of the brokers that does offer it, and so right here is the continuous contract pulled up. So it's like you have the at symbol at BTC, and that's the continuous Bitcoin futures contract, and I have it on a daily chart, and that means that each candlestick you see represents one day. Now if you go to the top, the upper left hand corner of the window here, it's really small and it's kind of hard to see these numbers. So what I'm going to do is go to Format and go down to Window, format my window, and this is called your status line. And so here's my status line under the font tab. I'm just going to keep the font style. I'm going to make it bold, and I'm going to pull it up to about a 14. Set that at default. You can do it however you want. I'm going to hit OK, and it makes it a little bit easier to see. So up here on your status line, you have your symbol. You have the time frame that the chart is pulled up under. This is from the CME. And keep going as you have the bid and you have the ask. Now, volume 55. This is based on March. I'm going to go to down here. Do you see this tab BTCF18? That is the January 2018 contract for Bitcoin. Again, up in the upper left-hand corner, BTCF18. Different contracts, months, has a letter. And I honestly forget the letters all the time. I have to keep looking up what's the letter for this month for different commodities and stuff. So Bad memory. I'll get it one day. So the January one is F. Okay, for 18 represents 2018. This is a daily chart, and I want you to notice up here, B equals 14. 550, A equals 15, 0.95. That's the bid ask. Now look at the spread between the bid ask, the size, the amount of ticks, amount of dollars between. You have 14,550. You know, that's there's like a buy order. That's the bid. Someone's willing to buy at that price, and then but people who are willing to sell are willing to sell at this price. That's the asking price, 15,095. It's a big difference. Okay. Because look at the volume. V equals 760. It's a very light volume. And if I keep going further down, here's the February contract. It's a daily chart. Look at your bid ask. Again, 11,920 on the bid, 15,150 on the ask. Volume, V equals 47. Let's go to March. See if March gets any better. The March contract as of today is the bid is 14,790 and the ask is 16,415. Volume is 55 contracts. So what this looks like when something is very liquid and has a much higher volume, I'm going to go to the ES, the S&P 500, meaning it's the continuous contract. Look up here. Look it. I hear that a lot. Look it. Look it. All right. So the bid, 2,724 and 75 cents. Look at the ask, 2,725. You know, that's like one tick. It's like a quarter. Look how tight that is. It's one move away. Look at the volume, 1,139,096. And it's kind of like if you go to a farmer's market or a place where there's a lot of vendors, and you have vendors trying to sell, I don't know, cell phones. Everyone's trying to sell cell phones at these tables, and they're all the same cell phone. They're all competing against each other. So if you're competing against each other, what typically happens to the price? The price from vendor to vendor gets smaller. Okay, it contracts, and it's like you're on sale for $99.95 and you want to sell it to me for $99.93. Oh, look down here, this is 2 pennies cheaper, $99.90. Okay, you win my business. So it's very competitive, very competitive. Whereas though if you go into a market, farmer's market, and there's like 2 vendors, they can kind of charge whatever they want. You only have 2 options. All right, you only have 2 options, and they can, the spread kind of widens out a lot. Same way like pre-market, post-market, the spread gets wider. It's not as many people there. It's not as many, buyers and sellers, and the crowd thins out. So volume makes a big difference. I mean, think about it. If you bought, let's go to January Bitcoin contract. Okay. So the spread is so big. It's 450. It's almost 550 dollars. It's like if you go in and out immediately, you could lose a lot of money. You can lose a lot of money, if it goes against you. So just keep that in mind. Volume, very important. So if you want to trade the futures contracts right now, pay attention to your bid-ask spread. Okay, it's not tight right now. It's not tight at all. You need the underlying to really move in your favor. Because if it moves against you, whatever position you get in, long or short, you have to overcome the spread as well as the underlying moving. Alright, so I'm checking out. I just wanted you guys to take notice of that and get the volume context for Bitcoin futures in comparison to other things that are way more liquid. Alright, I'll talk to you later. JB Trader out. Enjoy your day.